All right, today we are pulling back the curtain on something that affects all of us, how a modern economy is actually managed. We're going to use India as our case study to really see how it all works. Let's dive in.
I mean, you've probably felt this, right? One minute, you're looking at a loan and the rates seem great, and the next, they've crept up. So why does that happen? What is really pulling the strings behind the scenes on the cost of your loans?
Well, believe it or not, it basically comes down to a single, really powerful number. A number that acts like a master switch for the entire economy.
So, to understand that number, we've got to open up the central bank's toolkit. We're going to look at the main lever they pull to steer this massive economic ship.
And here it is. It's called the repo rate. Now in India, the central bank is the Reserve Bank of India. You've probably heard of them, the RBI. The repo rate is, put simply, the interest rate the RBI charges when it lends money to the commercial banks. You know, the ones we all use every day.
So how does this actually play out? It's pretty straightforward. When your local bank needs a little extra cash for the short term, it turns to the RBI, which is kind of like the banker to the banks. In exchange for the loan, your bank puts up some collateral, in this case, government securities. And the interest that the RBI charges on that loan, that's the repo rate.
Honestly, the absolute best way to get your head around the power of this one number is to think of it as the economy's gas pedal and its brake, all rolled into one.
Okay, so check this out. When the central bank feels like things are getting a little overheated, prices are rising too fast, what we call inflation, it hits the brake. It raises the repo rate. That makes borrowing money more expensive for everyone, so people and companies tend to spend less. But if the economy is feeling a bit sluggish, the RBI hits the gas. It lowers the repo rate, which makes loans cheaper. That encourages us to borrow and spend, and that helps kickstart growth. It's this constant, delicate dance between the gas and the brake.
Oh, and one quick thing to clear up. You might also hear people talk about the reverse repo rate. Don't let it confuse you. It's just the opposite. Repo is when the RBI lends to banks. Reverse repo is when the RBI borrows from banks. It usually does that to kind of soak up any extra cash that's sloshing around in the system.
So if the repo rate is the main tool, how on earth does the central bank know when it's time to hit the gas or pump the brakes? Well, they need a really accurate dashboard, a way to measure what's actually happening to our cost of living.
And this is what they use, the Consumer Price Index, or CPI. This is the big one for measuring retail inflation. You can think of it like a financial thermometer, constantly taking the temperature of the economy by tracking the prices of all the stuff we buy.
And when we say a basket of goods and services, we're not talking about anything abstract. We're literally talking about your weekly groceries, the fuel you put in your car, your rent, a new pair of shoes, a visit to the doctor, all the essentials. The CPI just tracks the average change in the price of this whole basket over time.
So who's running the show here? Well, it's really a team effort. You've got the National Statistical Office, the NSO. They're like the official scorekeepers. They gather all the data and release the main CPI number every month. Then you have the RBI, the key player, who takes that number and uses it to decide what to do with the repo rate. And you've also got the Labor Bureau, which calculates more specific CPIs for different types of workers.
Now, to measure any kind of change, you need a starting line, right? A fixed point of comparison. For India's CPI, all these price changes are measured against a benchmark, which we call the base year. And right now, that base year is 2012.
Okay, so we've seen the modern tools they use to steer the economy day to day. But what about the bigger picture, the long-term strategy? Well, for decades, India's economy was guided by these huge national mission plans.
Yeah, before the current system really took shape, the Indian economy ran on a series of 5-year plans. You can think of them as a giant national to-do list that laid out the country's biggest goals and priorities for the next 5 years.
The very last one, the 12th Plan, which ran from 2012 to 2017, had this incredibly ambitious slogan at its heart. It showed that the goal wasn't just any old growth, but a very specific kind of growth.
So let's actually break that down. What did it all mean? Faster was about the hard numbers. They were aiming for a staggering 8% average GDP growth. Sustainable, that was about the planet, a real focus on protecting the environment and boosting renewable energy. And inclusive, well, that was all about the people, making sure everyone felt the benefits by aiming to slash poverty and create tens of millions of new jobs.
And what's really cool is you can actually see the thinking change over time just by looking at the slogans. The plan before this one introduced the idea of faster and more inclusive growth. But then the 12th Plan added that third, absolutely critical word, sustainable. It was a clear sign of a growing understanding that real progress has to work for people and for the planet. So let's put it all together. We have the economic lever they pull. That's the repo rate. We have the dashboard readout that tells them what's going on. That's the CPI. And we have the historical blueprint for the whole journey, the 5-year plans.
And that really brings us to our final thought here. The whole era of these rigid 5-year plans is over, mainly because a modern, complex economy is just too unpredictable to manage with a single top-down plan. But the challenges, well, they're still the same. The goals of achieving fast, sustainable, and inclusive growth are more important than ever. So it leaves us with a really big question for today. As an economy keeps evolving, what should the blueprint for its future even look like? Definitely something to think about.